Welcome to Trading an Edge, the podcast where we break down the psychology, mindset, and system of elite trading. In this deep dive, we're exploring how mastering the observer effect can radically transform your trading performance. It's about turning those unconscious reactions into conscious control and, impulsive trades into intentional execution. Every trader, I think, faces it. That moment where you know better, you absolutely have a plan, but something else just takes over. It feels like this invisible hand pushing buttons. And here's a disruptive truth for you. Most traders don't lose to the market, they lose to themselves. They trade without ever really seeing what's driving them. Unseen emotion is unchallenged power. Today, we're going to shine a light on that something and equip you with a really powerful concept to shift that dynamic.
Yeah, absolutely. Our mission today is really to cut through all the noise, and give you a direct route to understanding this profound principle. It underpins both quantum mechanics, surprisingly, and peak trading performance. We'll show you how simple awareness can actually become your greatest edge, helping you see the forces that have been, well, moving you rather than you moving them.
Okay, let's unpack this then. Before we dive straight into the trading psychology, maybe we should set the stage a bit. We need to grab this core idea from the really bizarre world of quantum physics,
Yeah.
the observer effect itself. Where does it come from?
So what's remarkable, truly remarkable, is that at the quantum level, think tiny particles. The very act of looking, of observing, fundamentally changes how these particles behave. Imagine a tiny electron. Before we measure it, it exists in what's called a state of superposition.
Superposition, like a cloud of possibilities.
Exactly. It's like it exists in multiple states, multiple places, all at the same time. But the moment we try to measure it or, observe it, it snaps into a single definite state. It's almost as if our awareness forces it to pick one reality.
So its potential is kind of limitless until we lock it in with our attention. Okay. How does that compare to a trader? The market's potential seems limitless, but maybe our internal state collapses our own potential. Is that the link?
That's a great way to put it, and the famous double-slit experiment really shows this vividly. When you shoot light particles, photons, at a screen with two slits, and you don't watch which slit they go through, they act like waves. You get this interference pattern on the back wall, like waves overlapping.
Okay, like ripples in a pond interfering with each other.
Precisely. But here's the kicker. The instant you put a detector there, and you get a measuring device to see which slit each photon goes through, the interference pattern vanishes. Gone. The photons start behaving like neat little particles, just hitting in two distinct lines.
Just by watching.
Just by watching. The mere act of observing fundamentally altered its reality. It's almost as if they knew they were being watched.
That is really weird. It's kind of like how in some video games, the world only renders, only loads, where the player's actually looking.
That's actually a pretty good analogy. Richard Feynman, the physicist, famously said this experiment contains the only mystery of quantum mechanics. It's impossible to explain classically. The most accepted idea, Niels Bohr's Copenhagen interpretation, basically says particles don't have definite properties until we observe them. Measurement forces the choice.
Not everyone bought into that, though, right? Einstein wasn't a fan.
Indeed, Einstein famously disagreed, saying, God does not play dice with the universe. He believed in underlying rules, not just randomness triggered by observation. But it raises this critical question for us, for traders. If this fundamental aspect of reality of the universe is so profoundly affected by observation, what does that mean for your internal world, especially when you're in the heat of trading?
Right. So the core idea we're getting at is this. If external observation alters reality at that tiny quantum level, what happens when you turn that same powerful gaze inward? When you observe your own thoughts, your emotions, while you're trading?
That's exactly where the observer effect stops being just theoretical physics and becomes practical psychology. Clinical insight, really. The moment you become aware of your internal state, that rising anxiety, that urge to chase you interrupt its automatic control, awareness creates space. And that space enables discipline.
Okay, awareness creates space. I like that.
Because without this conscious observation, your trading is often just driven by, all that unconscious stuff. Biases, raw emotions, ingrained habits. These internal forces act like an invisible market, constantly pulling your decisions off course without you even fully realizing it.
Yeah, you hear it all the time. Your biggest opponent isn't the market, it's yourself. You see traders making these impulsive moves driven by something they can't quite name. It's like your mind is the command center. But most traders, they never check the monitor. They're reacting like soldiers lost in a fog, just shooting at shadows. Observation is like putting on night vision goggles. It shows you what you're really firing at. So what exactly are these shadows, these unconscious influences?
Well, we're talking about really powerful emotions. Fear is a big one. Fear of loss, obviously, but also fear of missing out, FOMO. Then there's greed, frustration when things don't go your way, anxiety, even overexcitement after a win. And think about the physical side of it, too. That knot in your stomach when you're tempted to chase a breakout, or how your shoulders tense up watching a trade go against you.
Yeah, definitely felt those.
And beyond just pure emotion, you've got all the cognitive biases swirling around. Confirmation bias, only seeing evidence that supports your trade idea. Hindsight bias, oh, I knew it would do that after the fact. Anchoring, getting stuck on an old price. Loss aversion, which makes holding losers way easier than cutting them.
Oh yeah, loss aversion's huge.
It is. And recency bias, giving too much weight to the last couple of trades. And all this stuff often leads to those damaging impulses, like overtrading, revenge trading after a loss, or just impulsively jumping in or out without following your actual plan.
Okay, those are definitely powerful forces. But here's a question. Sometimes isn't that gut feeling, that intuition, something that really experienced traders rely on? How do we tell the difference between genuine, skillful intuition and just another one of these unconscious biases or emotions taking over? How does observation help there?
That's exactly where observation becomes critical. See, fear itself doesn't hurt you. It's reacting to fear unconsciously that does the damage. Greed doesn't cost you your account. It's the moment you don't notice the greed influencing your decision that you end up paying for it. Observation turns that emotion from an enemy you're fighting into useful intel. It lets you pause and ask, okay, is this feeling truly an intuitive read based on my experience in the market? Or is this just my anxiety, my FOMO, pushing me to break my rules? Observation gives you that choice point.
So it's about creating that pause, that moment of reflection instead of instant reaction.
Okay.
Okay. But if our sort of reactive brain, our limbic system, is wired for certainty, and trading is fundamentally about dealing with probability and uncertainty, how do we even begin to observe and maybe rewire that?
The key tool is mindfulness, but applied specifically within the trading context. It's not about chanting or anything esoteric. It's simply the deliberate practice of noticing what you notice, like turning on an internal camera that just records your emotional and mental landscape without judgment.
Noticing what you notice.
Yeah, this simple act, just noticing, creates that crucial pause between maybe a price spike, and your habitual response like chasing.
Yeah.
It allows your rational brain, your prefrontal cortex, a chance to step in and align your actions with your trading plan, not just with that fleeting emotion or impulse.
Hmm.
I remember working with this one trader. He realized he always clenched his jaw tight right before making a revenge trade. Always.
Ah, physical tell.
Exactly. Just noticing that jaw clench became his personal warning signal, like a self-imposed circuit breaker. He'd feel it, pause, and recognize, there's that impulse again.
That's a fantastic concrete example. So how do we systematically develop this skill, this self-observation for trading? Are there practical stages we can follow?
Yes, absolutely. I think we could break it down into 3 critical stages for cultivating this observer mindset. First, it's about becoming an observer of your biology and emotion. This is fundamental. Most traders are just completely oblivious to how their body is jump-starting these emotional reactions. If you were truly observing, you'd start to notice the telltale signs. Things like your breathing changing, maybe holding your breath, or it becoming shallow and up in your chest instead of calm, diaphragmatic breathing.
Right, that fight or flight breathing.
Exactly. Or muscle tension, that clenched jaw we mentioned, tense shoulders, a tight stomach, fear, anger, greed, impulse. They all have these physical signatures. Observing these bodily responses, we can call it first-order observation, helps you catch the emotion early, regulate it before it sweeps you away into a bad decision.
So catch it before it escalates.
Precisely. And a really powerful technique here is what's called emotional labeling. Simply verbally, or even just mentally, naming the emotion you're experiencing. Saying to yourself, okay, this feeling is fear, or, this is frustration building.
Just naming it. How does that help?
It sounds simple, but it externalizes the emotion slightly. It creates a little distance. When you're about to chase that breakout and you feel that familiar stomach clench, if you can label it, okay, that's FOMO, it's not just giving it a name. It's recognizing that specific bias that's trying to pull you away from your actual setup rules. It creates that micro pause, allowing you to ask, wait, is this really a high probability setup according to my plan, or am I just chasing because I'm afraid to miss out?
Okay, so it's about catching those physical tells, those early warning signs, almost like running a self-diagnostic check in real
You
time.
got it. And that naturally leads into the next stage, which is equally crucial. Second, becoming an observer of your thought life. This is huge. You and your thoughts are not the same thing. Often, our thoughts are just having us running the show.
Thoughts are having you. Explain that.
Well, you need to start observing the actual conversations happening inside your head. Like, really listen to them. For example, a trader might hear this impulsive voice screaming, "Take a profit now. Don't be greedy. Lock it in." But at the same time, there might be another, quieter, more disciplined voice reminding them, "No, stick to the plan. The target is higher based on the
Yeah,
rules."
that internal battle.
Exactly. By observing this debate, this internal chatter, instead of just letting it wash over you and dictate your actions, you gain perspective. You realize these thoughts often stem from underlying emotional programs or beliefs. You need to become an observer of those programs, rather than just being blindly controlled by them.
It's like separating the passengers shouting directions from the driver who actually has their hands on the wheel. You can hear the passengers, acknowledge them, but the driver makes the final decision based on the map, the plan.
That's a perfect analogy. And that leads us directly to the third stage, which is perhaps the most subtle,
Hmm.
but also the most powerful. Third, becoming an observer of the beliefs driving your performances. Now, we're not talking about the beliefs you say you have, like I'm a disciplined trader.
Okay.
We're talking about the beliefs that are actually evident in your real trading performance. What is your trading account, your equity curve telling you about your underlying beliefs?
So the results reveal the true belief.
In many ways, yes.
Yeah.
If you have ineffective beliefs operating unconsciously, maybe a deep-seated belief that I have to be perfect on every trade, or I can't handle losing money, or even I don't deserve to succeed, you'll see the result of those beliefs playing out.
Hmm.
Maybe chronic stagnation, blowing up accounts, or consistent small losses. Your P&L reflects those beliefs.
Wow, okay.
You need to observe the internal conversations you have with yourself about what it means to be a winner in trading. Is your internal narrative all about needing to control the uncontrollable outcome? Or is it about skillfully engaging with uncertainty, focusing on flawless execution of your edge, managing probabilities effectively? You realize that you and your beliefs are not the same. By observing them, you recognize they are just one possible way to organize yourself. And crucially, you can consciously choose to reorganize your belief system for significant performance gains.
That is a really profound shift in perspective. It moves way beyond just tactics and setups. It's
Yeah.
about what you fundamentally believe about yourself, the market, and your ability to navigate it. So, okay, this is all incredibly insightful. How do we make it practical? How do we apply these insights day in, day out to consistently cultivate this observer mindset in our trading? Can you give us a step-by-step framework?
Absolutely. To consistently apply the observer effect and build that observer muscle, you need to integrate some core practices into your daily trading routine. Let's break it down. First, the pre-trade mindfulness check. This is non-negotiable. Before you even think about placing a trade, take a deliberate 30 seconds, not just a quick glance. Actively observe your breathing. Is it calm, deep, or shallow and rapid? Identify any dominant emotions swirling around. Are you feeling calm and objective? Or are you rushed, maybe still annoyed from the last trade, excited, anxious?
Be honest with yourself.
Totally honest. And crucially, confirm if your current mental state aligns with the requirements you set for yourself to trade effectively. Ask yourself, point blank, am I truly calm and focused enough right now to execute my plan flawlessly? If the answer is no, even slightly, step away, take a break, reset, don't trade from that state.
That seems like such a simple filter, but I can see how it could prevent so many emotionally driven errors before they even happen.
It's incredibly powerful. Okay, second, implement in-trade pauses and check-ins. This is for when you're already in a position. During volatile market action, or especially when you feel that strong urge to deviate from your plan, maybe cut a winner too soon, or widen a stop loss, impulsively take a brief conscious pause. Observe the emotion driving that urge. Label it. Okay, I'm feeling FOMO right now, or this is anger wanting me to revenge trade, or this is fear trying to make me snatch profits.
Acknowledge it. Don't fight it necessarily.
Exactly. Acknowledge it, name it, but don't immediately act on it. Then, and this is key, immediately reread your specific trading plan rules for that situation. What does your plan say you should do right now? This creates that vital space, that gap between feeling and action, allowing you to choose your response based on your rules, rather than just reacting impulsively to the emotion.
Okay, pause, observe, label, consult the plan. Makes sense.
Third, engage in structured emotional journaling. This needs to go way beyond just recording your entries, exits, and P&L. That's just surface level stuff. For each trade, or at least at the end of each trading day, take time to record your emotional state during key moments. What thoughts were running through your mind? Did you notice any specific biases trying to creep in?
Like specific prompts.
Yeah, use prompts like, what specific emotions did I feel when entering this trade? Was it confidence based on my setup? Or was it impatience? Did I notice any hesitation or impulsivity during the trade management? What bias might have been influencing me here? Confirmation bias, maybe anchoring to a previous level. Doing this consistently allows you to identify recurring patterns in your internal market, your psychological triggers, not just patterns in your trade outcomes.
That turns every single trade, whether it was a winner or a loser, into a valuable piece of data about yourself and your process. Love that.
Precisely. It's about learning from your behavior, which leads to the fourth practice. Conduct a dedicated post-trade behavioral review. Again, this is different from just looking at whether the trade made money. Review how you executed it compared to your plan. Did you follow every single rule precisely? Where did you observe your emotions trying to pull you off track? What specific physical sensations or thought patterns did you notice when you felt tempted to deviate? What could you observe differently, or perhaps label earlier next time to maintain control and stick to your edge?
So it's less about judging the outcome and more about evaluating the process execution.
Exactly. This isn't about beating yourself up. It's about objective data collection on your internal performance, identifying areas for improvement in self-awareness and discipline. And finally, a fifth technique you can try is the trading persona exercise. This can be quite effective. Mentally create and embody your ideal disciplined trader self. Think about how that version of you operates. Calm, objective, rational, focused solely on flawless execution.
Like an avatar of your best trading self.
Exactly. Then, when you're facing a challenging decision in the market, or feeling a strong emotional urge to break your rules, pause and ask yourself, what would my disciplined trading persona do right now? How would that ideal version of me handle this situation, free from the emotion I'm currently observing? This creates a helpful mental separation and can really help you align your actions with your highest standards, rather than your immediate impulses.
These are really practical, actionable steps. It seems the observer effect isn't just a cool concept. Applying it really transforms reactive emotional trading into something much more intentional, much more disciplined. By actively, consistently observing your internal landscape, your thoughts, emotions, physical sensations, beliefs, you really do start to gain conscious control over those psychological responses that used to run the show.
Absolutely. And it's crucial to remember this cultivation of self-awareness, this building of the observer muscle. It's a continuous process. It's not a one-and-done thing, but it's a process that leads directly to greater consistency, better decision-making, and ultimately much more resilience in the face of market uncertainty. Mastery in trading, or anything complex really, isn't about achieving perfect control over everything. That's an illusion. It's about witnessing yourself, seeing your own patterns before you lose control. Because if you don't see it, you're consumed by it. But the moment you observe it, the moment you shine that light of awareness on it, that's when you take back the edge. So the question to ask yourself is, are you just watching the market, or are you truly watching yourself interacting with the market?
Trading an edge, where psychology meets profitability.